What's going on? What's going on? What's going on? It's your boy Ty. So today we're going to actually take a quick dive into Charlie Munger's and Warren Buffett's index fund investment strategy. All right, so smack that like button and let's get right into it. Get it?
Investor use in purchasing this index?
Yeah, I would say that in terms of the index fund, I would just take a very broad index. I would take the S&P 500 as long as I wasn't putting all my money in at one time. If I were going to put money into a index fund in relatively equal amounts over a 20 or 30-year period, I would pick a fund, and I know Vanguard has very low costs. I'm sure there are a whole bunch of others that do.
So you got to ask yourself, are you a long-term investor or are you a short-term investor? I feel like that's the first question that you should ask. Let's keep this thing going.
But I would be very careful about the costs involved because all they're doing for you is buying that index. I think that the people who buy those index funds on average will get better results than the people that buy funds that have higher costs attached to them.
You heard what he just said? He thinks that people who buy index funds on average will have better results. All right, we're just going to listen. We're going to listen to somebody whose level is above most people in investing.
Because it's just a matter of math. If you have a very high percentage of funds being institutionally managed, and a great many institutions charge a lot of money for doing it and others charge a little, they're going to get very similar gross results but different net results. And I recommend to all of you reading John Bogle's written a couple of books in the last 5 years, and I can't give you the titles, but they're very good books, and anybody investing in funds should read those books before investing, or if you've already invested, you still should read the books, and it's all you need to know really about fund investing. So I would pick a broad index, but I wouldn't toss a chunk in at any one time. I would do it over a period of time, because the very nature of index funds is that you are saying, I think America's business is going to do well over, or reasonably well over, a long period of time.
Yep.
But I don't know enough to pick the winners, and I don't know enough to pick the winning times. There's nothing wrong with that. I don't know enough to pick the winning times. Occasionally I think I know enough to pick a winner, but not very often. And I certainly can't pick winners by going down through the whole list and saying this is a winner and this isn't, and so on. So the important thing to do, if you have an overall feeling that business is a reasonable place to have your money over a long period of time, is to invest over a long period of time and not make any bet implicit.
So once again, it comes down to the question of, what type of investor are you? Are you a long-term investor or are you a short-term investor? Here's the reason I like index funds. You know, we're going to get back into this video, but I just wanted to go ahead and tune in on that because I want to get your mind primed for investing. Now, you got trading and you have investing. You have trading and you have investing. Okay? These are two different terminologies, two totally different things. Let's get it.
By putting a big chunk in at a given time. As to the criteria as to when you should or shouldn't, I don't think there are any great criteria on that. I don't think price earnings ratio, determines things. I don't think price book ratios, price sales ratios. I don't think there's no single metric I can give you, or that anyone else can give you, in my view, that will tell you this is a great time to buy stocks or not to buy stocks or anything of the sort. It just isn't that easy. That's why you go to an index fund, and that's why you buy over a period of time. It isn't that easy. You can't get it by reading a magazine. You can't get it by watching television. You'd love to have something that said, if PEs are 12 or below or some number you buy, and if they're 25 or above you sell. It doesn't work that way. It's a more complex business than that. It couldn't be that easy when you think about it. So if you are buying an index fund, you are protecting yourself against the fact.
Basically, Buffett said, hey, if it's too easy, you're probably in the wrong place. This is somebody who's a master investor. You know what I'm saying? He never said it wasn't simple. He just said, hey, if it's too easy,
So if you are buying an index fund, you are protecting yourself against the fact that you don't know the answers to those questions, but that you think you can do well over time without knowing the answers to those questions, as long as you consciously recognize that
Very
fact.
insightful.
And I would, if you're a young person and you intend to save a portion of your income over time, I just say pick out a very broad index, and I would probably use the S&P 500, because I think if you start getting beyond that, you starting to think you should be in small caps this time and large caps that time, or this foreign side. And as soon as you do that, you're in a game you don't know. You're not equipped to play.
My man said, "Hey, put your money in the. It's a risky business at the end of the day, but it's all about taking solid risk and quantifiable risk. So in a sense, Buffett just saying, be smart where you put your bread. He even said, hey, for young people, you know what I'm saying? I'm not 18 anymore, you know what I'm saying? But hey, for young people who are just getting started and things like that, Buffett is giving you a way so you can invest long term and truly have a very deep portfolio to where you can eat, to where you'll be able to. Who knows if you'll be able to become financially free, depending on the amount of bread that you put in, obviously, but hey, there's something to look at here. There's beauty in all situations. All you got to do is just tap in.
Yeah, in all candor, that would be my recommendation. Charlie?
I think his second worry is that common stocks could become so high priced that if you bought index funds, you wouldn't expect to do very well. I didn't think I'd live long enough to
Get it out,
think
Charlie.
that was likely to happen, but now I think that may happen.
But
Bro said it's too
probably what
high
you're
to
saying
buy.
there is that they could get to a level and they'd have to be at a sustained level like that for a long time.
They could be there and stay there for a long time.
In which case you might make 3 or 4%. But would there be anything way better than that around under those circumstances anyway? And pass the peanut brittle, please.
My man said, pass the peanut butter,
in-
please.
in-
Pass the peanut butter,
In
please.
Japan, where something like this happened, the return from owning a nice index over the last 13 years or so is negative. Can something as horrible as that happen here? I mean, is it conceivable? I think the answer is yes.
Okay.
But the option in Japan, of course, is to have deposits in a bank or own Japanese bonds at somewhere between 0 and 1 or 1.5%. So if rates on everything get very low, which means stocks sell very high, then it just means that you live in a different world than existed 20 or 30 years ago, when generally capital got paid better.
My man put out the whole box of peanut butter brittle. So check this out, right? All right, so we put up Yahoo, and on Yahoo, this is the SPX500. This is it's a trust. So what we're gonna do is we're gonna look at these year to dates. I want you to see the return on investment every single year. We're gonna go through. We go through about 10 years on the SPX500. This is what Warren Buffett's talking about. You know what I'm saying? So one thing about it is you can listen or you can go apply that shit. You can listen. See, listening is just gonna go through one ear and go right out the other. But it's the difference between getting information, listening, and taking action. All right, so let's keep it moving. Right, so year to date, this year, 17%. Right. All right, last year, 2022, we know last year wasn't a great year for the stock market, so it was minus 18%. Okay, 2021 was a great year. Trump was in office. Shit, there we go, 28%. All right, the year before that, 18%. This is per year. So we're talking about investments per year, long term. We, at the end of the day, shit. I'm not a financial advisor, but I'm really good at analyzing information and taking action on the information that's being analyzed. All right, so we're going to keep going. All right, so this is 2020. So then, boom, 2019 was a great year, 31%. All right, 2018 wasn't the best year, minus 4%. But check this out. For 1, 2, 3 years, that's 3 years worth of gains on your portfolio. 3 years worth of gains in your portfolio. You got to think different. It's all about, it's all about how you perceive this information. It's all about how you perceive this information. And, if you think different, you're going to get different results. If you think different, you're going to get different results. If you continue doing the same thing over and over, guess what type of results you're going to get? The same results that you've been putting in that work for. The same results that whatever you took action on, that's, whatever you sow, that's what you're going to reap. Hey, man, the reason I love investing, is because at the end of the day, I believe it's the truest way right? It's the truest way to freedom. It's the truest way for a man to become a man. You're expanding your lot. You're expanding your income. You're expanding your provision. You're expanding how much you can provide, how much you can, this is, as a man, I feel like you should be definitely locked into some sort of investment, because at the end of the day, even if you're going to work, you're investing something, and that's time you can't give your kids, time you can't give your family, time you're not able to hang out with whoever you want to hang out with, time you're not able to do whatever it is that you want to do. You get what I'm saying? So what's better, time or money? Shit, we can always make more money, but we'll never get back more time. All right, so let's get back into this real quick. I'm gonna go through a few more years with the SPX500 just so we can tap in. All right, so 2018 minus 4%. It wasn't the biggest year, but it wasn't the biggest decrease either, right? Look, 2017, 2016, 2015, 14, 13, 12, 11. These are all positive gains from 2019 to from 2009 to 2007. That's positive gains in that portfolio. For how many years straight? 1, 2, 3, 4, 5, 6, 7, 8, 9 years. Well, yeah, 2009. 1, 2, 3, 4, 5, 6, 7, 8, 9 years. Say less, 9 years. I just had to double count, but hey, sometimes all of the information is right in front of you, and all you have to do is seek out those who can understand, seek out those, who are tapped into this game, bro. At the end of the day, right? This investment game is information changes situations. What type of information are you receiving? You get what I'm saying? That's what's going to take you to the next level. Mind you, we analyze data. You get what I'm saying? So that's information. What type of data is inside of your wallet? What type of data is inside of your network? What type of data or people are you around that are able to give you, different type of insights that can help your investors' mentality to take you to the next level? Now, I'm about to slide out of here. You feel me? Enjoy my Saturday. But I was, I had watched a little bit of that video, and I was like, nah, I need to go ahead and do a reaction to this. So that's what I did, baby. We're going to get that bag on YouTube, too. What's happening? I'm over on Facebook running it up. So we're going to come back to YouTube and get that bag. At first, I didn't know what type of content to make, but shit, I can do this all day. This is what I do. This is what I'm doing on the Facebook anyway. So I might as well just do it for you guys as well. Tap into some of the things that I like. And on this type page, you'll be able to tap into a little bit of my mentality, right? So, hey, man, if you want to work with me, all you got to do is go smack one of the links in my bio and tap in that way. Or, hey, it's a bunch of videos on my page. You can watch those. Or you can go to Amazon, type in Tyler K. Moore, and you're going to find a book called Trade or Die. Make sure you add that to your cart and read that. We're going to be coming to digital soon. And then also I'll be doing the audiobook version. It's not going to be the robotic guy. It's going to be me. All right. So it's your boy Ty. Appreciate you guys for tuning in. Make sure you hit that like and subscribe button and have a great day.